Nestle is the first FMCG company to post its Jan to March quarter numbers, and this is quarter 1 current year 21 numbers for Nestle. So what are we expecting in terms of numbers? Obviously, revenue growth for most FMCG companies are going to be strong on the back of a favorable base in the last year, that's last Jan to March quarter, when we'd seen the pandemic had just hit the country. So that is something, a favorable base is going to be hitting numbers of most of the companies as well, and so is it going to be hitting the numbers of Nestle as well. Now in terms of Nestle, we're expecting a revenue growth of around 8.9%, and that will be coming in at 3,621 crore rupees. The bottom line, or the profits of the company, we're expecting a 12.9% growth on a year-on-year basis, coming in at 593 crore rupees for Nestle. Now margins of the company, this is the EBITDA margin, or what we call the operating margins of the company. We're expecting a 70 basis point expansion, around a 70 basis point expansion in terms of margins of the company, and so the margins are expected to be at 24.6% versus 23.9% on a year-on-year basis. Now what are the other important factors? Volume growth for the company, we're expecting at 8 to 9%. Nestle does not come out with a volume growth number, but an inferred volume growth, what we'll be expecting, it will be 8 to 9%, so let's keep an eye out on that. In terms of overall what is aiding the growth, obviously we'll be seeing strong growth in prepared dishes, which is actually working well for most companies, as well as improvement in out-of-home portfolio also in Jan and Feb. Surely people were going out, so out-of-home portfolio also had seen an improvement. Now we are seeing an impact of the second wave, but that will be coming in the quarter, the next quarter, that's the April quarter. So let's keep an eye out on commentary which will be coming in over there. But other than that, gross margins of the company, we're expecting an expansion this time in terms of gross margins, mainly obviously led by lower milk prices for the company. So that was not something that Nestle saw much of an impact coming in on the milk prices, as well as the wheat prices were not too much of an increase on a year-on-year basis. But sequentially, prices have surely gone up. If you see milk prices, wheat prices, all of them have started increasing, and there's a higher trend now. So sequentially, we may see some gross margin contraction due to the inflation of raw materials. Moving forward, EBITDA margins, or the operating margins of the company. So cost optimization measures is something that will be aiding the EBITDA margins of the company, despite that we've seen that increase coming in a bit of a raw material inflation, which are inching up now. So cost optimization is something that is aiding the EBITDA margins of the company. Now we expect focus coming in on new launches to resume further. So rural trends also something that we'll be watching out for in terms of what is the commentary coming in for Nestle. Other than that, commentary on out-of-home consumption. What is the management's outlook on material cost? Very, very important, since we've seen inflation coming in raw material, because that will show us the impact going forward on margins as well.